Welcome back to Fast Money. Bitcoin now well below 10,000 as investors fear bigger crackdowns coming for the crypto space. Bob Pisani's got more from the New York Stock Exchange. Bob.
Hello, Melissa. Cryptocurrencies are seeing more fallout today from fears of regulation. So Bitcoin's now fallen 18% over the last 2 days as watchdogs weigh in on the digital currency space. Yesterday, it was the SEC issuing a warning that consumers should be careful about trusting exchanges that they say are protected by federal law, but they're not. Most are unregulated. Now, the SEC seems to be setting up for a crackdown. They want exchanges to register with the SEC. They've previously said initial coin offerings, ICOs, are securities and that anyone selling ICOs to the general public should register with the SEC. But this goes further. The SEC thinks even the exchanges listing ICOs should themselves register. It's another move toward further regulation. Also yesterday, a district court in New York ruled that cryptocurrencies can be regulated by the CFTC as a commodity. Now, the CFTC has already had the power to regulate trading in Bitcoin futures and other derivatives, but this ruling implies the CFTC has jurisdiction in the case of fraudulent activity involving any kind of cryptocurrency transaction, including the cash markets. In other words, general law regarding fraud can be used by the CFTC in dealing with cryptocurrencies in any form, whether it's cash or derivatives. Now, what's this all mean? Regulators started getting very noisy about cryptos toward the end of last year. So some of this can feel a little bit like Groundhog Day. You know, we've all heard this before. But the regulatory scheme is evolving now. Slowly but surely, the regulatory net is getting cast wider and wider. Back to you, Melissa. All
right, Bob, thanks. Bob Pisani. Our next guest says that should regulations hit the crypto space, one coin will emerge unscathed. Spencer Bogart is a partner at Blockchain Capital, which invests in a variety of crypto assets. Spencer, great to see you again. Welcome back to the show.
Thanks so much for having me.
Which is the one coin that will emerge unscathed? Because it looks like the price action is showing that every coin is getting hit at this point.
So to say unscathed might be to go too far. But listen, when we're separating Bitcoin, which is the one coin that we're discussing here, from the rest of them, it's certainly the least risky here, right? So what's going on in the market this week? There's a lot of regulatory concern about from the SEC and from the CFTC, right? The SEC is the 900-pound gorilla in the room. The SEC is primarily concerned with securities, right? And the SEC has delineated that some crypto assets are securities and some are not. Now, along a spectrum, Bitcoin is the furthest away from being a security out of all of the crypto assets, in my opinion, and therefore it is the least likely to kind of come under a regulatory crackdown. Now, that said, I think that the long tail of ICOs and tokens that have come out, some of them are going to be at risk, and some of them could face liquidity crunches in the coming weeks.
Now, why is it that Bitcoin is the furthest away from being a security? It's because the money that people, if I buy Bitcoin, that money doesn't go towards a business or towards a core group? I mean, that's the thinking?
Sure. So the SEC has an established framework for thinking about this, and a core portion of that framework is the Howey test. There's 4 prongs to the Howey test. Listen, I am not a securities attorney, so definitely do not rely on my advice here. But a big portion of this is that investors contribute money to a common enterprise with the expectation of profit based primarily on the benefit from or the efforts of others. So in the case of Bitcoin, that's just never has been the case. There was nobody that launched Bitcoin and said, here, I'm going to sell you 20% of the coins for a specific price, right? The software was launched into the world, people started mining it, and it grew organically. There is no central enterprise that receives the money that investors pay for Bitcoin and then deploys it, right? This is a decentralized network with decentralized participants.
Hey, Spencer, do you think that's one reason why Ethereum, or Ether in particular, has underperformed over the last couple of months versus Bitcoin? Because for all intents and purposes, it was an ICO, and there's a lot of ICOs that are built on top of its platform.
Yeah, I think it's more the latter that could be weighing on Ethereum this week. So you're right that Ethereum did itself have an ICO several years ago. That said, I think that if we read between the lines of what the SEC has said prior, it seems to indicate that they do not consider Ethereum to be an ICO. To be a security. But several of the tokens that have launched on top of Ethereum likely are being deemed securities. And if so, we consider Ethereum to kind of be the feedstock or the fuel that people use to participate in these ICOs. Then in that case, we should expect demand to dwindle at least a little bit in this regulatory crackdown.
How does this sort of changing landscape on regulation, as it concerns ICOs, Spencer, impact the way you look at ICOs right now and decide whether or not you want to buy them as the rules are being created?
Sure. So, I mean, if we look at something and, our counsel or the people that we depend on, seem to indicate that something is a security, then we're going to want to see a project that follows all securities regulation. That means doing the appropriate filings and restricting your sales to the appropriate investors that are suitable for that type of an investment. That said, not all of the crypto assets that we invest in are necessarily securities. So some of them can be, crypto assets like Bitcoin that certainly are not securities. And in that case, we're a little bit less concerned about the securities framework and a little bit more concerned about the long-term viability of the economics.
It'll be interesting how ICOs now market themselves in relationship to this. I mean, I would imagine that ICOs, from their standpoint, all they would say is, you know what, this is almost like a donation. There's no expectation of a shared profit in the future. I mean, that's essentially what Tezos' co-founders have said in relationship to the investigation that supposedly is going on into the $232 million they raised in an ICO. They said this is like a donation, and the token you get is a gift bag, implying there is no expectation of profit. I mean,
a tote bag, I believe it is.
A tote bag. Oh, yeah, I thought it was. Sorry, I remembered it was a gift bag. But the same impact here. The marketing is going to change greatly, so we won't really. Do you really think that you're going to get paperwork from an ICO which says, hey, we're just like a securities, here's our papers, take a look?
Oh, definitely. Some of them definitely are taking that approach. So, we're seeing across the whole spectrum. So we're seeing some that are going the straight securities route, are doing all the appropriate filings and restricting their sale in an appropriate manner. And then we're seeing others that clearly think that they are outside of that, and that might be the right approach. Again, it kind of remains to be seen here. But I don't think that you can just change your marketing pitch and expect that regulators are all of a sudden just going to give you breathing room. Yeah. It's more substantial than that.
I don't know. I don't know.
Is that one of your biggest wishes?
Yeah.